I want to talk to you about where things stand as far as the global economy is concerned. The view at this point in time is that the recovery that we've seen, which started in 2016, has picked up further. There has been an upgrade of the world economic outlook for both this year as well as next year. What do you believe is going to continue to drive growth for the global economy?
It is very positive that finally the whole world is growing, and that on its own deals with the mother of all crises, the crisis of confidence. What has happened with the prolonged, almost 10 years long crisis is that even if all the signals were in place for growth to resume, investors were holding back. This is finally not the case anymore. One note of caution, though, we always have to recognize that when we are in better times, there is this tendency of the drive for reforms to weaken.
That's right.
And that kind of complacency we ought to counter. So our message from the bank is very clear. Concentrate on driving competitiveness, concentrate on productivity. We still are a bit concerned about the levels of productivity in the world economy. We have to continue to strive for improvements. Christine Lagarde uses a very good phrase. She says, the sun is finally shining, time to fix the roof. Well, bitter experience from the past shows that we actually fix the roof when it is pouring.
Yeah.
Let's hope that this time around we will be wiser.
Okay, we certainly should hope that the reform process across the globe continues. But one of the other areas of concern has been the rising threat of protectionism. Since you talked about Christine Lagarde, the IMF in its latest report says that while the threat of protectionism continues to be on the horizon, it has receded in comparison to where things were in 2016. Would you A, agree with that point of view, and B, how do you see it progressing?
I very much agree with that, and we see that this receding of the threat of protectionism actually comes with the upswing in the world economy, which we know from experience is always being accelerated when nations trade with each other. So more growth now means more trade, and more trade hopefully would generate better prospects for growth. It is very important for countries like India, depending quite a lot on expanding their export potential, to be on that front line of multilateralism and trade.
But since you're talking about multilateralism, you know, if one looks at what's happening in the U.S., for instance, where President Trump says no TPP, no NAFTA, let's deal with nations on a bilateral basis. There's a WTO meeting coming up in December. We don't know what the fate or future of that is going to be. Are you worried about what happens to the multilateral architecture and system?
When we had our annual meetings this year, we found, to our surprise, a very positive energy going through the meetings. There is that sentiment that multilateralism has served us well and that it has to be protected. I also would add to that the evidence has been very clear through the last decades that we grow faster when we do it together. Of course, we also need to be mindful that in the years before, we have been somewhat negligent to the fact that not everybody has benefited from globalization. There are pockets, people who really are on the losing end. And unless we are mindful of the fate of people who are left behind, we won't be able to carry forward commitment to us working together. But if you look at the problems we face, for example, climate change or extremism, none of these big problems can be resolved by one nation or one organization alone. We need each other. And I strongly believe that our self-interest of working together is the one that would dominate.
You know, when you're talking about working together, one of the reasons perhaps why we've seen global growth return is the coordinated action of central banks. it is likely that the era of cheap money will continue, but both the ECB as well as the Fed are now talking about winding down the stimulus, and the Fed, of course, is talking about hiking rates, and we've got a new Fed chief in office in February. So what's your take on where interest rates are headed and what that could do as far as flows to emerging markets are concerned?
Well, provided growth remains on this trajectory, there would be a gradual correction in interest rates. They would go somewhat up. I don't expect this to happen anytime soon. It would be very cautious because we all know that while the world economy has improved, there are still risks and that we do not want to push this recovery backward. So I don't expect any rapid moves. Therefore, everybody else can adapt to changes that would be taking place in the next years.
So given the fact that you're betting on structural reforms continuing, you're also betting on governments providing fiscal incentives to ensure that growth and the growth momentum that we're currently seeing continues. Which are the bright spots that you see today on the global map?
Well, India, for sure. What we see is the European economies are doing much better, especially the new members of the European Union, but also France. Reforms that President Macron is pursuing, for example, labor market reforms, have been delayed for far too long, and now they are lifting up the competitive spirits of French businesses and those who invest in France. So there are, if you look at the map, you would see practically in all continents that drive to improve competitiveness, and that has positive spillover effects within the European Union. Second year in a row, all economies are growing and growth is accelerating. Here in Asia, China, India, the rest of Asia, Asia is actually in a very healthy growth situation. The US economy is doing quite well. But again, we need to remember that what goes up has a tendency to go down.
Yes.
And therefore, we have to work on reforms for the sake of this long-term sustainability of prosperity on our planet.
You know, one area where we've actually declined on a global basis is the gender gap. I mean, the World Economic Forum has just put out its gender gap report, and it's stalled for 2017 across the world, and things don't look good even for countries like India, where we've fallen even further. You know, as a woman in power at the World Bank, what is it going to take to ensure that these awful numbers, 200 years before we can close the gender gap when it comes to wages, you know, what is it going to take eventually? Do you believe that legislation is the answer?
Well, for sure it would take more women in power. But yes, experience has demonstrated that if you want to accelerate gender equality, you have to push measures that help you do so. Whether they are targets or quotas, unless countries, especially countries that are falling behind, unless they mobilize action that is measurable, it is very unlikely it would happen. We at the World Bank want to walk our own talk, so we made a commitment to have 50% women in senior management, the level of vice president and above, by 2020. Well, very proud to report that we are now at 44.4%. Usually the last couple of percentage are the most difficult to achieve, but we will get there. And we will get there because we have a clear target to work towards. I think in India the potential of women to get in the economy is huge. To get there, we need to remember there is no really silver bullet.
Yes.
There has to be more safety and security for women to go back and forth to work. We have to make sure that the conditions at the workplace are amenable to women, there is flexi time, that there is childcare for women. We have to make sure that women are encouraged to move up. Women have a tendency to be a bit more self-critical, restricted. I myself, every job I have been approached for, my first reaction would be, there must be somebody that is better than me for that job. And that's all this combination of measures, and let me finish where I started, and just having more women in senior positions, it is going to make a difference. And we know that when women work, everybody benefits. The calculations made on what it would mean for gender equality to be achieved are mind-boggling. Somewhere between $12 trillion and $28 trillion more in the world for prosperity of all people, if only we can get there.
Well,
so we must.
We must. I don't think there has to be any more debate on this issue. It's a question now just getting it done. Unfortunately, we haven't. But let me end then by asking you about the one thing that gives you hope and confidence about where the world is headed, and the one big risk that you would focus on or worry about.
What gives me confidence is that even over the 10 years of crisis, the world has become richer. And that wealth is growing practically almost everywhere. The biggest risk I see is that there is a part of the world that is falling behind and even further behind. These are countries where extreme poverty is growing, either because of conflicts or natural disasters or very high population growth or very bad governance. And this we cannot ignore because it is morally wrong, but also because instability somewhere else affects the stability of the whole world. So that dedication and focus on countries and people left furthest behind, also on people left behind within nations that are doing better. We need that. Without more equality within countries and across the world, it would be difficult to sustain our strive for more prosperity.
Well, we hope that we do see more prosperity. Always a pleasure. Thank you very much for joining us here on CNBC TV18, and we hope you have a great trip here. Thanks very much for joining us.
Thank you.
Well, with that, it is time for us to wrap up the CNBC TV18 special from all of us here. Goodbye. Many thanks for watching.